Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Bull versus Bear webinar on Thursday, the 2nd of February. Steve Miley on the call for trade day. Welcome. Right into the midst of the chaotic, massive, in fact, amount of news flow, data flow, event flow that we have. So we're not even halfway in yet. Well, just about halfway in actually from yesterday. So Fed, obviously, we'll talk a bit about that. Bank of England, that's come and gone. Talk a bit about that. ECB about to come. Talk a bit about that. And then market reaction, and then what we've got coming up. Meta as well. Talk about a bit about that. What we've got coming up. Go through the what's expected next 12, 24 hours. And then we'll take a look at the few bits on the charts. So, first of all, obviously, let's do a little backward looking. Most recent, actually, Bank of England raised their borrowing rates 4%, but did hint that rates are near peak. Something that the Fed kind of did as well. Bank of England raises key rates to 4%, saying more hikes may be needed. Inflation risk still is signaling to the upside. But markets generally taking this positively. 2 votes for no change in here, 7-2. The vote was expected, and that's what we got. 50 basis points up. But the market generally in here since then, we got an initial dip. Oh, excuse me. Apologies for a big sneeze. We've got an initial dip lower in the pound, then slight rebound in the pound in here. Markets, though, generally positive. If we go and take a look. The FTSE up 0.5% in here, not as quite as much as the DAX, up 1.36. The CAC French index 0.27. FTSE being the UK index. So markets in here sort of similar tone, not the same, but similar tone in here from what we saw from the Fed. Let's talk about the Fed then. So here's the changes, quite a lot of changes compared to the previous one. So they took a lot of this stuff out regarding elevated supply-demand impacts in here. Pandemic, they took that out. Took us some of the stuff out around the war in Ukraine, contributing to elevated in here. Determining the pace, the extent, this was important. In determining the pace of future increases, instead of the pace, how fast, to the extent, to what level. Okay, so indicating we're getting near to the end. Okay, plans to use the size of Federal's balance sheet were issued in its previously announced plan. So yeah, and then the rest of this just names and dates. So not a big change, but then equally, Powell did, even though Powell said no rate cuts this year, market didn't hear that. Take a look at the dot plot chart, and obviously stocks surging higher and higher still. Nasdaq up another 1% on Meta. Meta surging higher, relief from the Fed, and I did say yesterday buy the dip, we did get a dip and it did rally, if you're going to meet expectations, likely to see rate cuts this year. So basically saying that we're likely to, looking for a soft landing. Prospect of a US soft landing remained alive. You guys I'm sure know all of this already. Wall Street rallies as Fed pound nods to easing inflation. Yeah, so inflation definitely easing. That's what he said. Inflation is easing. Disinflation. Powell used the word disinflation has started. Disinflation, falling prices not going up as much as previously. So it's all moving in the right direction. 5 things. Fed Federal Reserve dividend expected 25. Jerome Powell saying policy may expect to deliver a couple more interest rates. Okay, so before the market was only pricing in one more. We'll come to the Fed Watch tool shortly. Bank of England, ECB. Bank of England have already gone similar. ECB in focus, expecting 50 pips. 0.5% from the ECB. Obviously, all eyes on the press conference. European stocks up with US, and Adani continues to be grabbing the headlines, but not really impacting what we're looking at. So kind of not a huge amount to kind of add, you guys know what's gone on. It wasn't uber dovish. Yeah. The market was wanting something, I think, dovish. It wasn't expecting hawkish. It got kind of slightly dovish. Okay. A slightly dovish step. And certainly if we go and take now a look at the CME tool. So now we're looking at only another 25 in here, but a chance of no change at the next one, so this is slightly up, I think, from previous. So looking for 25 at the next meeting, 475 to 500 range. If we go out to May, why is that not going to May? Oh, here we go. May. So May still 47500, and the market kind of undecided. Is it going to be less than that, or is it actually going to be more? So Powell's telling us, here, right, 500, 525, 2 more hikes. Okay, that's up to here. Yeah, market's still not believing it. We're not seeing that 500, 520, still saying at 475, 500 peak. So the market's pricing in one more hike. Fed's telling us maybe a couple. Yeah, so on a different page. If we go to the end of the year, though, we're at 450, 475 right now. Okay, we're expecting a hike. We're looking at 450, 475. So the market's still pricing in here at the November meeting, looking to be back where we are. So the market's pricing 25 up from here and 25 back down again. By November and December, I think December, another cut. So the market is pricing year-end rates below where they are now. The market's pricing 25 up and 50 down. And Powell basically said no rate cuts this year. So the market's still fighting the Fed at the back end of the year. So there's either disappointment coming or a happy surprise, a positive surprise. So we're going to have to monitor that going forward. Monitoring Fed speakers, obviously they've been embargoed. We've got Fed speakers going to be coming up the next few days and into next week. They're going to be interested. ECB preview, expecting a 0.5 point. And then obviously where's the guidance from there? Okay, whether a third follows in March, a matter of intensifying debate. So that's going to be interesting as well. That could have an impact on European stocks today and maybe knock into US indices as well. What do we have coming up then? So obviously ECB is all in focus now, and then not much more until then overnight tonight. Then we start getting the PMI data into tomorrow. But what we do get, much more importantly, it's not till after the bell, but we get, I think there's going to be a big FOMO rally today. I can only be bullish after, you had Meta yesterday. If we just go back to yesterday, sorry, I didn't cover Meta yet. But Meta in here beating on the revenue. Guidance was positive. And Zuckerberg seemed very upbeat in here. So all of that points to upside. As I say, NASDAQ rallied another percent after the bell on Meta. So that's all positive. I just don't see us not going higher today. And I know we've got this unknown. We've got three unknowns, Apple, Alphabet, and Amazon, all very much on the horizon. Not too after the bell, but I think the market's not going to want to go into those short. So for me, it all stays bullish. I don't really think it's worth going into a huge amount more detail. You've done your Fed watching. So boom, big rally on S&P, sitting right up the top there, the opposite to a dead cat bounce. High level consolidation, I would class this as, is the 15-minute chart. So, boom, dip and a rebound, as we said, through the Fed. Market chopping lower and back up again in here. So doing well and holding on to gains in here and still pointing higher, high level consolidation. This for me, it's held on to those gains and it still looks strong, post the close. And then going back to the daily chart, this is the S&P, the high there is in sight. If it gets above that high, this is an even stronger base. So I really think we can push through the high there, and then you've got another failure high here from September. So the peak here from DEC is 41.80. The failure there is 94.25. I think we can easily be up to and through those today. Maybe a 42 handle today on the S&P. NASDAQ already taken out the peak there from December, way through that and higher, and still going. Now we're looking at bigger targets up here. Is it going up to this one today? That's above 13,000, probably not quite 13,000. Is it going, can we get up to like high 12,000s, 12,800? Yes, I think we can today. Yeah. So, and then again, zooming in, it's high level consolidation. Look, high level consolidation, another rally overnight on the overnight. And this is just all pointing up to me. I can't advocate a short. And I think we could see an explosive day, another explosive day today. Let's have a quick nod to the commods. So first of all, in here, gold, bullish. It's been tracking, from the move down through last year and the rebound in here through this year. Even though safe haven is tracking equities, right? And it's because of the dollar weakness. So dollar weakness equals gold strength. The dollar's down on risk on. So dollar went lower yesterday post-Fed, slightly more dovish tone expectations. So gold higher with a weaker dollar. And again, holding up there, high level consolidation, flag, right? Boom, boom, up again. And it's the same for the equities. They're like flag patterns. So for me, continuation on those. Let's take a look at oil. Oil, very negative, post-OPEC, post-Fed, and down on the lows now. only can be pointing lower, right? Here we go. There's the sell-off. Dead cat bounce. Boop. There we go. And that's a new lows. And if we go and put the fib on that little bounce, just from yesterday's sell-off, you can see the market only just managing the 23.6, didn't get above the 38.2. Now making new lows has to be negative for me. And then a quick nod to, I'll go to the 10-year note. Stays bullish in here. Higher prices, lower yields. It's echoing the dovishness of the Fed, or the perceived dovishness of the Fed, or the dovish step. Okay, so in here, and obviously a fading risk of a recession. So bonds going higher, lower yields, right on the back on yesterday's highs again. 10-year note, no reason we can't push towards the peak over here. So upside risk for 10-year notes today, back up to the peak from the middle of January or earlier in January, and here mid January. The high there 116.08, so up to 116.08, certainly a possibility today for the 10-year. So bullish, basically bullish treasuries, bullish gold, bullish stocks, bearish oil. Yeah, so and not much more to say than that, guys. That's how I would be playing it. We bought the dip. The suggestion was buy the dip yesterday. It worked. I don't think you're going to get the chance to buy the dip. I don't think there's going to be a dip. I think you just, for me, it's pull the trigger now. When's time to buy it? When you see it. And I think all the risk is to the upside right here, right now. So yeah, I could only be long on stocks, long risk. That's it from me. Any questions? I know it's a bit, there's not a lot to say really. It is what it is, right? If you're bearish, sorry, but I don't see any path for this other than up. And I know it's the easy option, but I'm a technical analyst and the trend's your friend. And so there we go. All right, I'm going to leave it at that, guys. I'm going to wish you all a great trading day. Have a great, good one. I'll be back with you. Remember we got that after the bell. There's opportunities after the bell as well today, so maybe stay tuned. Maybe make sure you close out, but then there's potential opportunities either before you have to close out or after you close out. Post the data from the Amazon Alphabet and Apple, and then and then we've got rolling into tomorrow. We've got employment and PMI data, so that's going to be interesting as well. And we've got the outlook from the ECB coming up soon as well. All right, guys, I'm going to wrap it. Have a great one. Take care. Have a great trading day. Stay safe. I'll be back with you tomorrow. Cheers. Bye.